Welcome to my channel. I'm Dr. Romano. In today's video we are going to be talking about why interest rates are going through the roof. This has nothing to do with inflation, because if they wanted to fix inflation, they would have started in 1999. The price of a house between 1992 to 1999 had doubled. My parents' house went between $350,000 to around $670,000 in just 6 years. There's something wrong when the real estate market doubles like that. And the fact then is that interest rates kept going down. Before we continue the video, please remember to do thumbs up. It's right there. It doesn't hurt to press it, to say thank you, Anthony. Thank you so much. The real reasons behind interest rates going through the roof is because our government debt, other countries don't want to buy that government debt anymore. And so what do? You increase the interest rate through the roof so that they do have an interest in buying that government debt. Because now we have a globalization that's changing. Some people say it's the end of globalization. Some people say it's the end of American government being the world leader, whatever it is. But the real reason behind interest rates going so high is because we have two countries out there. One already started a war, and the second country is about to invade. That's a big problem. And it's not that that country in Asia owns so much government debt from our country. No, actually Japan owns even more, and so does Australia. So to say that we owe everything to that one Asian country, it's not true. The fact is that they bought that debt because it's a sure thing for interest. They put up capital and they get a return for it. But now what's happening, and this is a guarantee because you could see it in the charts, you could see it for a fact that someone is pulling out of our financial markets. Who could possibly be pulling out of our financial markets before a war starts? An Asian country. And this is a fact because when you look at the data, this is what it's saying. I had noticed in August of 2021, that was last August, when I started my first week's worth of videos, I was doing my analytical work, and I noticed that someone was pulling out of the markets then. Of course, I didn't realize that there was going to be an official war 4 months later, but that was Russia. They were pulling out of our markets. And now, isn't it deja vu that it's happening all over again? Our markets have not just collapsed since January of 2022, but the gold commodities market is not going through the roof like it's supposed to. So this is my take on what's actually happening. Our government right now is dealing with the fact that that Asian country is threatening our government, that they're going to actually sell all their treasuries. And if they keep threatening us with that, that's a real devastation in our treasury market. Not only that, the US government has to now attract the typical person in America to buy that government debt. So what do? Well, you allow banks to create savings instruments that give a 7-8% return to the public. So now, no longer do you actually need to go buy a house to make money, because you're going to get fixed interest rates of 7%, let's say. I don't know what it will be eventually, because interest rates will continue to go up. They have to. And I will tell you how long they will go up. So this is how it works. Every time there's a war, interest rates go down. During the George Bush era, etc. If the government increases interest rates to a high amount, maybe this year or next year, I believe by next year it's going to be at its peak. And then after that, it will stay there. Of course, it's the last year that the president will be in office, so there will be elections, the taxation, everything could change. And so it's almost like the market is also being affected by that. Whether or not our taxation system is going to change next year, whether or not we're going to have a new president, everything is changing. Because if we do have a new president, then maybe the war won't happen or will happen. Or if we have a new Congress and a new Senate, that's a big change. But the fact is that when you follow what the government does, you always know what will happen in the future. You have to pay attention to what they're actually saying, because they can't really tell you directly, but when you look at the charts, you will see it. I had already seen that last year, that our stock market was going to go down because of those indicators that I follow. But of course, did I think it was going to be over 10 months, a beautiful waterfall the way it did? It was so smooth. And it actually helped traders not make any money because the volatility was so low. So what happened was traders kept trading every month trying to make money, but it's either they made the money one month and they lost it the next, and it was this yo-yo every single month possible. It was this yo-yo effect that happened every month for the past 10 months. So that's my take on what is happening with interest rates, why they have to go up, and the fact that the government will not help the real estate market. They cannot help the real estate market because that country out there, that Asian country who bought over $3 trillion worth of American real estate, that's who our competitors were. Every time a person went to buy a house, that's who they were competing against. Think about what $3 trillion worth of American real estate was. And we don't even know how much it was really, but we're just calculating how much it was. And I'm not saying it was the government, that Asian country, that was buying up the real estate. I was saying it was their real estate developers that were supposed to build those buildings. They would build the frame of the building. All those people that bought those apartments, some people paid with cash and some people got a mortgage. They took that money instead of finishing the building, and they came to America to buy American real estate. And it didn't matter what they bought, whether it was a one-family house, a two-family house, an apartment building, whatever, they bought it. And so what happens, Asian country says, okay, now it's time to get your assets out of America because you have to give it back to those people, or you have to finish those development projects. A disaster will happen in our real estate market. And this is what real estate people don't realize. We haven't had a lot of inventory on the market is because we had a huge competitor buying up American real estate. If you take away that competition, how much would the real estate markets actually go down? That's the question today. And that's why I believe that Ray Dalio is right. He said 50%, I said 30%. But with interest rates going through the roof for the next 3 years, you know what? He's right. The real estate market will drop by 50%. Because if you don't have that competitor buying up American real estate from that Asian country, then who's going to be the competition? If you don't have that competition coming in from that Asian country, then how could real estate prices stay where they are? It's just a logical question, and a logical answer to that question. I want to thank you so much for watching my video. Please remember, if you want to subscribe to my channel, press the button, and also do thumbs up. It's right there to say thank you, Anthony. Thank you so much.